Happy Friday, everyone. It is 8:01 a.m. Chicago time. This is episode number 2637. Please remember that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Um, let's take a look at the convergent trading pre-market summary sheet here. Not much going on. Mixed sentiment. Not sure why the label's not there. Mixed sentiment, no key earnings today. The calendar shows the inflation rate came out for France in line year on year, was a little bit hotter, 3% versus 2.9% expected. Housing starts in Canada, 253,000 versus 230,000. Canada's housing market still hot. We did get export prices month on month for February for the U.S. Came in at zero point 0.8 versus zero point 0.2 expected. Prices were significantly higher. Import prices were completely in line. We also get the New York. We got the New York Empire State Manufacturing Index came in at negative 20.9. This number's been relatively volatile. The expectation was negative 7. In about 12 minutes, we get the industrial production number expected at 0% for the month of February. And then today, we get Michigan consumer sentiment. This number is a mover because it's the preliminary version. So expecting 76.9 on that number, 76.9 at 10 o'clock today. The S&P is pretty much balanced. It's testing a range, but really we're on top of yesterday's balance. We'll talk about that a little bit. Quite a bit of volume, 302,000 in such a small range. This is, of course, the result of the fact that it is Triple Witching Friday today. Triple Witching Friday, Expiration Friday. Thank goodness. Cannot stand this week or this day. So I'm glad it gets behind us. Today, you'll still continue to get odd prints, odd behavior as a result of pinning, and then hedging for delta and gamma exposure into the expiration of those products. So one thing I was asked about this expiration thing. So many products will expire at 8:30 Central, 9:30 Eastern, right at the open. So someone wrote in asking, well, if they expire right at the open, then shouldn't be everything be back to normal on Friday? Why should we continue? Why should we continue to worry about what's going on with those contracts? And even though trading terminates in an expiring contract at 9:30 Eastern, so for example, the ES H4 will stop trading. So you are, and if you're still holding a position in that, you're going to be subject to settlement. Not a smart thing to do because you're not controlling your exit. That the last print on that product will be at 9:30 Eastern. Okay, but those who are holding positions against that expiring contract are still going to get called or exercised through the weekend. So what they have to do is continue to hedge that exposure that they have in that contract. So they may do so in the M contract versus the H contract. So just remember that this range looks wrong. Okay, let's refresh the data. Oh, it does look wrong. What is up with this? Hang on one second. I do not like having wrong data up. How interesting. Yeah, the range data, so it should be 5210 to 5230, but for some reason it's reporting 5221 to 5176. Let me just restart this and make sure that it's actually operating properly. Okay, just going to restart this data. Sorry about that. Quote page, symbols, yes, yes. Yeah, it's 5220. It has the wrong data for some reason. ESM 24. Okay. Yeah, sorry about that. The data is wrong on this. I should have noticed that. Um, now it's 5,209%. Um, 1 second. Let me fix this real quick, and I'll get back to you. Apologize for doing this during the broadcast, but this is fixable. These kinds of anomalies happen in during expiration. It's kind of annoying, but sometimes that happens. ESM24 replace with at ESM pound and replace all those numbers, and there you go. Now you have a completely different set of numbers, which are also wrong. It's giving me 7.25 points of range. All right, well, that's that. Let's move on. The S&P, the S&P condition right now is really balanced. I mean, it's a multi-distribution profile, but it's really balanced. The volume is 195,000, not 300 and whatever, and the range is approximately 20 points, 20.75 points. Apologies for the poor data. Um, and then what we have is VWAP mid on top of settlement, which is also on top of the overnight point of control. What we have right now is a market that is pretty much balancing out. This is where I want to spend my time today. We want to talk about the structures that are being created from day to day. So we have this rejection high at 57, or if you recall, I talked about this extensively on Tuesday. We tested new highs and then we finished below Thursday's low last Friday. This was quite bearish. Expected this to kind of draw down and stay below 5,200, but it refused to do so on Tuesday. Monday acted as expected, was relatively balanced, finished on the high side, which, we had range extension up on Monday. Not exactly what I expected, but so be it. Lower high. But then Tuesday we gapped up, pulled back to the POC, and then ended up finishing pretty strong. You can see the point of control shifted in volume to the upper end of the range, and we had taken back pretty much all of it. On Wednesday, we opened and we tried, we traded within the IB, and then we poked up there trying to get into that 46.75. So this 46.47 area is relatively important at the moment. Let me put a box around it so just as a reference. 46.47, and we'll use the red template for this. Okay, and what we did is we extended higher, but then we ended up splashing down, creating an excess at the low, finishing in what is basically balance here over the last 2 days, right? Yesterday we opened in balance. Sorry about my voice, it's very rough this morning. I'm drinking tea, but it's not helping. Yesterday we open and we test up just slightly and end up pushing lower and staying lower, and leaving an excess behind. This is important to me. The fact that we opened and left an excess by the end of the session, shifting balance down, and then here we are on top of that balance. We're trading at on this dotted line here. That's where the current market is. The fact that we're trading on current balance, what this starts to look like is this is a push or spike, pullback, retest, and it looks like it's still failing. Now remember, I came in on Tuesday. I couldn't do a trader bite on Monday, but came in on Tuesday saying, hey, Friday's structure is extremely important and it's quite bearish. And unfortunately, Tuesday um, did this kind of thing, and it's just, kind of, you have to throw your hands up in the air sometimes and wonder what this thing wants to do. But what it's telling us, the market's speaking, what Tuesday told us with this excess is that I believe that was an E bracket excess. So it's a middle of the day excess. Regardless, with this excess, it told us like, buyers do not like these prices below 5,200, and it ended up finishing pretty strong at 5,240. And then yesterday is reaffirming that this is the now normal price for the S&P. Yesterday rejected that. I don't have a catalyst for that. I don't know why. Don't care why. The fact is, and it's a fact, we left an excess above and we extended the range lower. We tested 5190 again. We keep testing the 5190. This area here, we just keep testing again and again. The 5200. We poked through the 5200 to 5190, and then came back to finish right in bounce. Normal variation day, and then today, combined with the triple witching, we have a market that's opening in bounce. So if it's not able to take this 46, as long as it doesn't take this 46, I'm still going to lean on what happened on Friday, and I'm definitely going to lean on what happened yesterday with the excess high. So my bias is short. So any push higher into that excess, as long as that excess doesn't get filled in, I'm expecting this thing to explore lower still. Okay, and so this to me looks like it has pushed to near highs. It has had two solid attempts at that high. This is a weakish high now, unfortunately, but this is what is setting my bias for today. So as long as we don't push into those single prints up here at 27 and above, as long as we stay below that, I'm expecting that the market is likely to re-explore yesterday's low. I see that as vulnerable, and then we start to make our way back to these familiar prices, which in the H contract were 50.92, 50.92, 50.80, or 50.76, and then 50.67, right? So as soon as we start to move down into this old balance zone, now I'm really comfortable looking at the former 50.67, which now is down here at whatever 50 points or whatever the roll adjustment was, 50.31, and then below 50.31 we have the gap, and we could see that now we are back into this big gap zone down here. This is, selfishly, not that it's wishful thinking, because I'm still responding to the facts on in front of me here. The fact that it double tapped tried to double tap this 46, 47 area and failed to do so with an excess high, and then we're opening in bounce. Those are facts. The push lower would provide a whole lot more opportunity than what we're doing now, which is just this really awful push and hold of highs, right? So the market's in this really big channel on a daily basis, and it's just stuck in the middle of the channel. I mean, this thing is not doing much right now. So it's almost reaching its apex here. There's likely to be a breakout above or below. We're consolidating, and when we have consolidation like this, or balance, balance above balance above balance, the move away from here is something you want to catch. Um, so those are the key kind of plays that we're looking at, and then we're looking for it to push down and start threatening these lows down here, 51.31, 51.27. We have a double TPO low down there on this day. That's when the action becomes tolerable. Other than that, no offense to anyone, but this is just a horrible trade in the ES. And also in the NASDAQ, too. The NASDAQ's been kind of rough. Look at what the NASDAQ is doing. It's just the current market condition is such that there's just nothing new to price in. All the good news is baked in. And these things are just resting. And you can see the NQ is sitting right on top of this big kind of balance zone. So neither the NQ nor the ES capture my interest. Gold captures my interest, and crude captures my interest, because crude has actually pushed through these multiple highs of 79 and has failed many times. You can see the wicks above the 79 area into the 80 area. Poke 80, come down. Poke 80, come down. Start at 80, come down. And now we're holding on to these prices. So crude is actually moving into the next range above, and is likely to continue in that direction now. Expected crude down at 76, was not able to do that, and now pushing in the other direction. So what does that mean? It means that crude is in a price discovery mode versus the ES&Q, which are not. GC is another one that normally provides pretty decent opportunities. GC has had just a tremendous breakout right at the beginning of the month. It ran basically $160 per ounce of gold, and now it's just digesting that. It's looking like it wants to pull back a little bit for a continuation on that impulse up. The other product that is actually slightly better to trade than the ES and NQ is the RTY. The RTY has been providing really decent structure, good rotations, pretty decent price discovery versus those traditional products. So I would encourage you to kind of expand your horizons a little bit. I know that contradicts what, for those of you who've known me for the last 16 years or whatever online, it contradicts the mantra that, hey, stick to a product, master it, and then move to others. Of course, if you don't have a trading plan and you move from product to product, all you're doing is just multiplying your losses. But those of you who have a trading plan are taking the time to define the narrative and then trading setups that support the bias that you see. It is best to diversify and look at other products, which creates more complexity, right? More time doing homework, more levels, more price maps to develop, more narratives to come up with, more biases, and then trading those biases. But I just am not an advocate of sitting through this pain. This pain of waiting for the ES to do something, and it's extremely choppy. Okay. So here's GC. You could see it's really it does pretty well. Again, crude, gold, please don't trade the main contracts. Trade the micros. They're financially settled. They're smaller. A good place to practice. There's always the risk of loss, but you want to go where the action is. It just makes no sense to sit at a table where there are no other players and you're just sitting there, waiting for somebody to show up. That's what it feels like in ES right now. I'll leave you with those thoughts. I don't have any scenarios today. It's in balance and it's likely to break. We know the prices above and below. We outline those. So all you have to do is just wait and see how this expiration day produces. Good luck. Mind your risk today. I'll catch you on Monday. Take care.